Greetings everyone, Jake Bernstein, Weekly Capital Markets Report. Trading lesson. Today is Sunday, the 3rd of March, 8:53 a.m. in Santa Cruz, California. If you're not familiar with the Commitment of Traders report, it would be in your best interest to do so, especially if you're an investor or a long-term trader. The Commitment of Traders report is issued by the USDA, CFTC, weekly. The raw data is free of charge. You can plot it on a chart. The data shows the net positions of large traders, small traders, and commercials. Commercials are the ones that run the market. They control probably 90% of the market or more. The report tells us how many contracts are long, how many contracts are short, and the net difference between them. I've taken that difference and plotted it on a chart. So on this chart, it doesn't matter what the chart is. The green areas show net commercial long activity. So of all the things commercials do, which is buying and selling, hedging and buy hedging and sell hedging, we want to know, are they net long or net short or net hedged? Every area in green shows a net long position by the largest traders in the world, commercials. Take a moment and look. They're buying before this rally, buying before this huge rally. Buying right at the bottom here, buying at the bottom here, buying at the bottom here. So their track record is extremely good, in some markets better than others. I want you to look at this. Here's silver. I'm going to take a close look at the silver. One moment please, I'm going to change the chart. Here's a silver chart. I want you to look closely at what commercial activity was prior to the recent rally in silver prices. That's going to go to a weekly chart now and show you a very graphic illustration. I pointed this out in the newsletter before it happened or while it was happening. Notice commercial buying activity right at the bottom, and then the carry through on the upside. Very significant. This has been the first time in many years that commercials have been net long silver, if ever. GC2, gold. Let me show you that one. And believe it or not, the voice is getting better. Gold, similar activity right at the bottom. Platinum. Similar activity right at the bottom, and copper. Massive commercial buying right at the bottom. So what does it mean? It means that at or close to the lows, or in advance of the lows, commercials established long positions expecting prices to go up. They have continued that behavior. What would happen if they became buyers, net buyers now? That would be very bullish. The fact that they were essentially not buying anymore is not a negative indication. What we're interested in doing is correlating commercial net long activity with bottoms in the market, including timing. In this case, very low sentiment on the daily sentiment index. So learn from it. Commercial activity, very important. Not necessarily for the short term, but for the intermediate term and long term. I hope you enjoyed the lesson. I'm Jake at trade-futures.com.